Hi guys, Gerusek here and welcome to yet another video. So in this one I will show you a very simple MQL5 script that will help you to analyze the overall noise in the market. So knowing the noise in the market is very helpful when you are deciding which markets you should trade, because trading very noisy markets is incredibly difficult and not reliable at all. So that's why I decided to show you a very simple script that will help you with that. So let's get to it. As you can see, I am inside the MQL5 IDE and I have created a new custom indicator. It can be either indicator or expert advisor. In this case, it doesn't really make a difference, but I decided for an indicator. So now I will just delete all of these comments because I won't need them, and then we can continue. I think it's a good idea to firstly describe how we will detect the noise in the market, and then we can proceed with the code. So the formula or the process of detecting noise is very simple. What we basically want to do is that we want to select a period that we will analyze. So for example, from here to here, okay? After that, we want to calculate the absolute price shift. So if we start at this point and end with this candlestick, we want to calculate the price difference from here to here. So that's 254 points. And then we also want to calculate the absolute cumulative price change. So for example, look at every candlestick, compare it to the previous candlestick and calculate the distance the price changed. So for example, if we start with this one, and we calculate the distance between closing prices. So this is the closing price for this candlestick. This was the closing price for the previous candlestick. So the price change for these two candlesticks was 154 points. So what we want to do is that we want to basically sum all of these distances together, and then we will use these two metrics to calculate the ratio in the market. So let's do exactly that. Okay, so we have to start with some inputs, obviously, and in this case I think we will only need one input, and that will be the number of candlesticks we want to analyze. So input integer, and let's call this input analysis candles or bars, and just to test this, so the initial value for this input will be, for example, 500, but when we test this script and when we see that it works correctly, we will increase the number because we want to calculate the noise basically for the whole market, but for now let's stick to 500 just to make it very simple to check, or let's even decrease the number to 100, and this is all we need for now. So we can either calculate this on init function or on calculate function. It doesn't really make a difference because we want to do one-time analysis of the whole market. So I guess it maybe makes more sense to do this on init function, because it's like a one-time simulation. So let's do it inside this one. Okay, so let's create a bunch more variables. So let me think. So we need sum of distances. So sum of distances is basically the cumulative sum of the closing prices between each candlesticks or each two candlesticks. And then we also need absolute, or let me just change this to uppercase, absolute price change, and that is basically the change between the starting and the ending point. So that's really that. So now we need to calculate or we need to get values for both of these variables. So it will be very easy to get the value for the absolute price change, so let's do that. I will create another variable called current price, which will be equal to i.close current symbol period current and shift 0. So by this I get the closing price for the current candlestick. And then I will also create one more variable called starting price. Yeah, and that will be equal to the I close for the current symbol period current, and the shift will be equal to input analysis bars. So we basically take the current candlestick and the candlestick at the start, and now we can calculate the price difference. So yeah, let's do that, I guess. Okay, so now we will say that absolute price change will be equal to the starting price minus the the other way around, current price minus the starting price, and we will divide it by the point, so we get the value in points basically, so it's easier to read and to work with. So this is the first step. So now we calculate the distance, for example, between this candlestick and this one. So we take this price, subtract this price from it, and we would get 183 points. Or in this case not, because we are taking high. So we would, in the code, we are working with the closing prices, but you get the idea. So now let's calculate the sum of distances variable. So for this we have to use a for loop. So for integer x is equal to 0, x is lower than input analysis bars and x++, so we increase the variable x with each iteration. So that's the framework for the for loop. And now let's create a few variables inside the for loop. So let's do, okay, so current price is taken. Let's do, well, I don't know how to how to name the variable. Let's just do price now. Okay, let's just call it like this, and it will be equal to I close symbol period current, and the shift will be equal to x. And then we will also create another variable called price before, yeah, which will be equal to I.close, and the same thing, symbol period current, and this will be x plus 1. And I hope you can see it well on my screen. I will just check the, let's increase this to 18, so this is the maximum font size, so I hope everything is visible. Okay, so now what we have to do is that we have to calculate. Now I'm not sure if we want the absolute value or not. I think we want the absolute value. Well, what would be the difference? Should we use the absolute value or not? So if we do use the absolute value, we would also have to use the absolute value in here, so we are not working with... Well, I guess it makes a sense because we want to calculate the ratio after that. So we want the ratio, and yeah, I think we will use absolute values. So just to make sure that we are not working with any negative numbers, what I will do is that I will put this inside a math apps function, which basically transforms this value into an absolute value, to a positive value basically. And now what we will do is that we will do sum of distances. So we will update the sum of distances variable, so plus equals math apps, and we can just do simply, since we are working with absolute values, we don't have to care whether we use price now minus price before or price before minus price now, because it doesn't make a difference. So we can do this, and then we will also divide it by point. So that's that, and I think we are good to go. So now let's just make sure that everything works as it should. So let's just comment out or print out, yeah, print, sorry, print absolute change points, which will be equal to absolute price change. And let's also print the sum of distances. Like, it won't tell us anything because it will be some huge value, but just to make sure that it makes sense to some degree. So this is sum of distances, and will be equal to sum of distances. And I guess we can run this script. So now let me just, okay, so we don't want this. We want this right here, and I will just clear this window. So now let's deploy the script and let's check it. So it's right here, and I don't remember the name, so noise indicator. Okay, so let's look for the noise indicator, which is right here. 100. So let's check this. So 100 bars back, so this is 100, and this is okay, so this is the closing price, 100 bars back, okay, 99, 100, okay, maybe, okay, it does make sense. Okay, I shifted by 1. Okay, well, this value is correct, yeah. And now sum of distances, we don't have to check it because it would take so much time, but let's just assume that it's okay as well, yeah. So now what we have to do is that we have to simply calculate the ratio, yeah. So very simple. Also, we want to standardize the value of sum of distances. Standardize it because of the number of analysis bars. Because, for example, if we were to increase it, sorry, these are advisors. If we were to increase this input to, for example, 500, yeah, now you can see that this value changes drastically, yeah, and the first one, it doesn't change that much. So we have to scale this to the number of bars that we use, so we can compare it with different number of candlesticks, yeah. So let's just do it right here. So let's make a space here. So double scaled sum, it will be just equal to sum of distances divided by the input analysis bars. So that's very simple. So now we can also print out the scaled sum. Yeah, so let's just do that very quickly, and then we can move on with the ratio. So scaled sum, yeah, so now you can see that the scaled sum is 91, or the average of the price movement is 91 points, yeah. Then if we, for example, change this to 800, yeah, it's 88 points. So now we can compare it, even though we change the input analysis bars value. Okay, so now let's calculate the ratio. So it's simple. Ratio will be equal to absolute price change divided by the scaled sum, yeah. And now let's also print out the ratio, and let's check it out. Okay, so a ratio, oh sorry, the other way around. Scale sum divided by the absolute price change. Now it makes sense. Okay, so the ratio is 0.03. Okay, it doesn't give us much um, information, yeah, because we don't have anything to compare it with. But now what we can do is that we can just increase this to 10,000. Yeah, still it won't give us much information. But now, like, the general idea is that lower D ratio means lesser noise. Okay, so if D ratio is lower, what it means is that you want the market is more tradable for you. Yeah, it's easier to spot trends. It's easier to rely on those trends. Yeah, so lower the ratio, better the market for you. Yeah, if you go for a trending market, for example. So now what we can do is that we can just we can also just delete this, and we can do ratio 4. And now, because now we want to compare it between different symbols, so I will just print here symbol plus this. So now it says that for GBPUSD it's this one. So now I will just clear the window, so it's very, very simple to see new prints. I will just change this to 15,000. Okay, so this gives us much more reliable results. So now over the last 15,000 candlesticks, the ratio, so the noise ratio is 0.005. So now what we can do is that we can, for example, open Euro USD, keep the same time frame. That's very, very important. And let's just deploy this with 15,000. Okay. And now we can see that Euro USD has more noise than GBP USD. Okay, so if you want to trade markets with lesser noise, go for GBP USD over the Euro USD. Yeah, so you can use it very, very simple like this. You can also, for example, check USD. Sorry, I didn't want this chart. I want USDN. Yeah, so the same thing. Just deploy where is it? Noise indicator 15,000, and check this. So okay, so USD compared to the Euro USD and GBP USD has the highest amount, or highest amount of noise. Yeah, so you can use it like this. Of course, if you are good with MQL5, you can create some for loop that will check all different symbols, yeah, and it will give you the ratio, or it can, for example, filter the symbols from the one with lowest ratio to the one with the highest ratio, and so on. So it's really up to you how you use it. I will just check. Okay, so it's 18 minutes. I guess I can do this. Yeah, it shouldn't be that difficult, so let's do this real quick. Okay, so what I will do now is that I will create a simple for loop, and I will deploy this algorithm on every symbol I want to deploy it on. Okay, so I will create an array of symbols, and then I will run this algorithm on each of those symbols, so we know which one has the best ratio, basically. Yeah, so let's just make it a little bit more advanced here. Okay, so now let's create an array, call it symbols to check. Okay, and okay, and let's do Euro USD, GBP USD, USDN. Of course, you can input or use any symbols you want. Let's do USD franc, Australian dollar, Canadian dollar. Sorry. Oh, now I am. Come on, is it Euro USD, GBP USD, USDN? I can't remember. Come on. I think this is next one. For example, we can use euro yen. We can use also. I can't remember the other ones. Yeah. So let's just stick with this example. But of course, the code will be dynamic. So you can just change the array. You can add some symbols. You can remove some symbols, and it will still work the same. So now the let's change this code. Yeah, it will be pretty simple change. What we will do is that we will create another for loop. So for integer, and let's call this s as a symbol is equal to 0. S is lower than array size. Okay, I can't see my keyboard. Okay, but it's okay. S plus plus. So now what we will basically do is that we will check this for every symbol that is inside this array. So we will start with Euro USD, then GBP USD, USD yen, USD, USD franc, USD Canadian dollar, and Euro yen. Okay, and we also want to store string. Let's do results, or let's do string here result. Okay, so this will be our text string called result that we will use for storing the results, the ratios for each of these symbols. So now I guess the only thing we have to change, yeah, so now you will see how simple it is to make this dynamic for multiple symbols, is that we have to create a symbol variable called symbol, yeah, and that will be equal to symbol to check at position s. Okay, so first iteration, this symbol variable will be equal to Euro USD. Second iteration, it will be GB USD, and so on. And now I'll just take this symbol and I will replace it in these functions. And I guess this is it. Yeah. And so this stays the same. And then what I will do is that I will just update the result string with this text right here. I will replace this by symbol, and I will also add a new line at the start. So I guess this is it. And at the end, so when this for loop is finished, I can just print out the result. So let's just test this out. And well, yeah, this works pretty well, but the thing is that I obviously don't have enough data for USD franc, USD CAD, Euro, yen. So let me just change this to let's do 500. Hopefully it will catch on. Okay, so I would have to download more data. This is some demo account that I'm using right now, but you can see that it clearly works. Okay, so you can use this. You can use this to filter out the noisy markets or to find the markets. Okay, so now for 100 candlesticks it worked for everything. So what we can say is that over the last 100 candlesticks, the best market to trade, or the most predictable market, is USD CAD, and the worst market to trade is USD yen. Yeah, so we can actually check it, USD yen. So the last 100 bars, it seems like there's a lot of noise and not enough trend. Yeah, so you can see that the trend didn't change basically, and there's a lot of noise. Okay, so and now we can also check USD CAD. Hopefully I have it here. Okay, we can't, sorry. I will download more symbols or enable more symbols for the next video. Anyway, this is it. This is how you use it. It's a pretty simple script, but it can be very helpful when you want to find the most predictable or not predictable, but the markets with the less noise, which can translate to the most predictable markets. Because if a market has a lot of noise, you cannot predict anything basically. Yeah. If it has less noise, it's more predictable. We can also check, for example, let's try euro yen. Okay, I can do that one as well. Maybe USD franc. Okay, I can do USD franc. This is the third best. Okay, so let's just check USD franc. So we are right here. USD franc. So this is 61 bars. Okay, so you can see that with USD franc there is some trend. Yeah, it goes in some direction. So there's less noise, and also a very good rule to go by is that if the ratio is below below 1, it's a good ratio. If it is above 1, it's a bad ratio. So you can use this as a very simple rule to decide whether your market is noisy or not. So this is it from me for today. I hope this video did learn you something. Yeah, I hope it was useful to watch, and I will see you in the next one. So bye.